You know what's wild about this year? 2025 has basically become blockchain's breakout moment. The whole infrastructure powering crypto has jumped from tech circles straight onto every major news channel. And yeah, that's pretty incredible, but honestly, what's really grabbing my attention? Watching these massive traditional finance institutions and what they're quietly building right now. Take NASDAQ, for example. We're talking about a genuine heavyweight here, not some startup. They flipped the switch to 24/7 trading this year. This whole thing went down in March, but it got completely overshadowed because the market was literally melting down at the exact same time, and everyone was too distracted watching their portfolios bleed to care about anything else. But zoom out for a second. These ancient institutions that built Wall Street are genuinely restructuring toward always-on markets. Right now it's 24/5, but we all know 24/7 is coming eventually. What blows my mind though? How are these guys actually building this system without plugging into blockchain or crypto at all? That's the puzzle. And right here is where everything clicks. They actually can't do this without the new tech, without crypto, without blockchain backing it up. What cracks me up though? NASDAQ circled back in August with an update, and listen to what they said. Trading costs skyrocket when exchanges are closed. NASDAQ is helping lead the charge towards 24-hour, 5 days a week trading, and investors stand to benefit. With the current limited trading day, studies show that off-hour trading costs are 3 to 6 times greater than during regular trading hours. So clearly this isn't going away. They're doubling down. We've got a date now. 2026 is when NASDAQ plans to flip that switch to 24/5. That's locked in. But the real question hanging over all of this, what's their playbook here? Because we've been tracking some interesting connections brewing between NASDAQ and certain blockchain heavyweights, Ripple being a big one. That's where the story gets spicy. But give me a second. Let me rewind to September 1st. Because that's where the Ripple connection really starts making sense. Because September hit us with a 1-2 punch. NASDAQ had company, the Dtcc stepped up and dropped their own 24/7 announcement. Here's how they framed it. In this interview with NASDAQ, they discussed the evolution and transformation of financial market structure from T+1 to 24/7 trading and digital assets. And listen, there's no way around this reality. You want 24/7? You're building on digital asset rails. That's just how it works. NASDAQ isn't pretending otherwise. Now here's where things got really interesting. NASDAQ didn't just talk about crypto from a distance, they actually walked into Ripple swell and then bragged about it on their official channels. I'm not kidding, NASDAQ posted this themselves. The digital asset ecosystem is at an inflection point. NASDAQ Chair and CEO Adena Friedman recently joined Ripple President Monica Long at Ripple Swell 2025 for a discussion on unlocking the potential of the digital asset ecosystem to enhance the global financial system. Think about what that means. The actual NASDAQ Twitter account sharing snapshots from a Ripple event where their CEO is sitting shoulder to shoulder with Ripple's president. The whole conversation centered on Adena Friedman on modernizing the future of global finance, unlocking the potential of digital assets to enhance the global financial system. Okay, so let's break down what NASDAQ is really doing with this 24/7 trading thing. They're literally leveraging digital asset infrastructure and the digital assets themselves to make it work. Here's where it gets interesting. Ripple's been absolutely crushing it with these major acquisitions lately, building what they're calling the Internet of Value. Sound familiar? Because that's exactly the vision behind this 24/7 transformation. Sure, we're talking 24/7 down the road, but the real story is how money itself is being reimagined on a global scale. Whether it's equities, property deals, whatever, stablecoins and DLT are the backbone making this happen. Rewind to November 30th real quick. There was this article. NASDAQ makes tokenized stocks a top priority. NASDAQ's crypto chief says they're moving as fast as they can to get SEC approval for trading tokenized stocks. This would allow investors to trade tokenized shares of publicly listed companies directly on NASDAQ. And check this out. Way back in September, Adena Friedman came out and said, NASDAQ filed with the US SEC to tokenize stocks. This is massive. Trust me, you want to catch what she's saying here. Take a listen.
You want to tell people what?
You think we should?
Yeah.
Okay. So, so this morning we announced that we're going to be bringing tokenization into our markets. So making sure that equities are tokenized and traded on market, in the markets, not in a side sleeve, but actually in the core markets.
So the eventual goal, or is it today? 24/7, 365 equities, just let it rip constantly.
I mean, I think we are all moving in that direction. We announced several months ago that we're moving to 24/5, so we're kind of moving that way.
So Saturday and Sunday,
not for equities yet. I think that we have to. We're walking before we run, but I think that getting to 24/5 is a major advancement for the U.S. equities markets. And then on top of that, now with tokenization, if we can introduce that also into the markets, it allows us to really think about streamlining the post-trade processing, bringing and modernizing elements of the markets that have a lot of friction. We are hyper resilient and we're hyper scaled. We manage, like today, we had 95 billion messages come into our systems today, and we had a median, return time of 20 microseconds from order to trade. We handle like 3 million messages a second. It's hugely scaled. But then at the same time, once that trade occurs, there's a different process. And then the post-trade process, as we know, is an area where tokenization really shines. And really cutting down the friction, managing capital flows across the global ecosystem, and really bringing that capability into the markets is going to be the next.
I'm curious to get your reaction to this. There's this very famous curve, which is like you get this early font of insanity, and then there's the trough of disillusionment, and then you grow through. And does it seem like crypto is actually in blockchain? It's finally real. It's like there's real companies doing real things, stable coins, what Sachs did with the Genius Act.
Well, I actually want to point to that because, honestly, having regulators who want to work on bringing it into the mainstream and want to create the rules of the road is such a refreshing thing, because I think that it allows us all to understand how we can operate within a world where there are tenets of investor protection. The technology is going to have things we can and can't do, but also being forward-thinking and forward-leaning in how the technology is going to be applied is going to be critical. So we're very excited about the fact that we finally have this convergence of regulation between the traditional markets, the digital markets. How do we bring it all together to, frankly, advance all markets? And we're very, very excited about that.
So when you look at what NASDAQ is broadcasting, what Adena Friedman is really saying, it boils down to this. Regulatory changes are happening, and they're pivoting hard toward tokenizing stocks, tokenizing everything, getting it all on chain. That November 30th headline proves they've elevated this to top-tier priority status. I mean, can you blame them? Regulations are crystallizing into actual law. We're watching legislation roll out across the globe. The entire financial infrastructure is evolving right in front of us. But here's what I keep coming back to. Where does the Dtcc fit into all this? Because think about it. Go check the title of this video again. Consider everything we've unpacked starting from September 9th. NASDAQ isn't operating in a vacuum here with tokenization and digital asset adoption. The Dtcc is in this game too. Truth is, the Dtcc has been experimenting with digital-based technology for a pretty long time already. So the Dtcc just put out this massive announcement. The shift to 24/5 trading. The shift to 24/5 trading, what it means for US equity markets. Welcome to the latest edition of the DTCC Connection. Get connected to the news and insights impacting the global financial landscape. The shift to 24/5 trading. Now, this isn't just the DTCC talking. Ernst & Young is partnered up on this report too. So as we start digging through what they're saying, here's what we're looking at. A new report from the DTCC alongside Ernst & Young details the industry's transition towards near continuous trading, the operational and risk implications, and the strategic considerations for market participants in preparation for the change. Key findings from the survey include the projected impact of volumes, expected areas of complexity, and more. Unlocking opportunity with TradFi and DeFi. At Sibos 2025, DTCC's Brian Steele joined a panel discussion on collaboration between traditional and decentralized finance, as the industry balances replicating the trust levels of TradFi with the massive opportunities of DeFi. Collaboration between the two worlds is essential to unlocking new efficiencies, expand access to capital, and build a more inclusive financial ecosystem. 5 things to know. Challenges and opportunities for T+1 in Europe. They're essentially unpacking the whole thing for us. Look, some of this is just filler content, but here's what actually matters. The Dtcc is committing hard to this tech in a massive capacity to merge the worlds of TradFi and DeFi. Diving deeper into what the report says, there's this section right here revealing up to a 10% of total equity volume projected to be trading during overnight sessions by 2028. The key findings are, by 2028, 1 to 10% of total equity volume is projected to be traded during the overnight sessions, boosting global market access. Retail and institutional participation. Retail investors are expected to initially drive overnight trading, with institutional participation assumed to rise during market stress and as infrastructure develops. Over half of the survey respondents foresee greater institutional activity in volatile periods. Market harmonization and safeguards. Risk margin and liquidity. But the million-dollar question is, what's actually happening behind the scenes here? Like, how are they making this work? Okay, so here's the deal with 24/5. You can technically squeeze that out of the old infrastructure if you bolt on some digital tools. But here's where things get spicy. We're talking about 24/7 now. There's no way around it. That requires a full dive into blockchain territory. Now, here's what I'm betting on. They're probably already plugging into DLT even before hitting 24/7. Why would I say that? Well, just peek at what Nasdaq's been building. And honestly, this image right here shows you everything. Digital assets aren't sitting on the sidelines anymore. They're front and center. Stablecoins are going to be huge in this equation too. But you know what really blew my mind about the Dtcc? Something they pulled off earlier this year. What am I getting at? Flashback to April 30th. Genfinity broke this story. Dtcc's master plan, tokenizing quadrillions in global assets with centralized control. Dtcc moves 3.7 quadrillion annually and just patented a system to bring all assets on-chain. And yep, they really went and did it. This patent is packed with features: interoperability across public blockchains, the ability to build private and consortium DLTs, dynamic rights management, wallet delegation, and even quantum security prep. The Dtcc dropped a statement explaining how blockchain technology is transforming transactions, powering exchanges of cash, equities, and physical assets on a single platform. They're also forecasting up to 10% of total equity volume projected to be traded during overnight sessions. Here's what the Dtcc is really saying. Blockchain is about to revolutionize how we handle cash, equities, and physical assets. Equities is the part you need to pay attention to. We're talking about stocks and every financial instrument you can think of eventually living on blockchain infrastructure. Let's talk about the Dtcc for a second. These guys are absolutely enormous in finance. We've broken down their role multiple times. They shuffle $3.7 quadrillion in securities annually. On any given day, they're processing north of 100 million transactions, valued at around $1.2 trillion. That's daily volume. They're a titan. What makes this patent critical is the attention it brings to DLT. But there's something even more interesting. It calls out specific DLTs by name. Look at what they listed out here. Implementations of distributed ledger and/or blockchain technology, including but not limited to Bitcoin, Ethereum, Hashgraph, Binance, Flow, Tron, Tezos, Cosmos, and Ripple, are compatible with the present invention. The documentation explains Dtcc's patent showcases an architecture that can plug into or bridge across any major blockchain and DLT environment, but with institutional custody models, delegated authority, centralized registries. They built this thing to work across multiple chains. We're seeing Bitcoin, Hedera, Binance, Flow, Tron, Tezos, Cosmos, Ripple, and the XRP ledger all mentioned. This is where you need to zoom out and see what's really happening. The financial system as we know it is being rebuilt from the ground up. The heavyweights are already making their moves. What the Dtcc just rolled out is a game changer for blockchain because they're clearly serious about using this technology to handle equities. This 24/5 trading movement is laser focused on the equity space. Nasdaq has basically handed us the roadmap. They're turning stocks into tokens. Equities are becoming digital assets. From there, they're supercharging the entire digital asset ecosystem by layering in stablecoin infrastructure across these DLT networks. We're literally watching century-old traditional finance titans plant their flags in digital asset territory. Most people are sleeping on how explosive this actually is. Anyway, that's a wrap on this one. If this resonated with you, throw a like on it, subscribe to the channel, hit that bell so you stay plugged into all the free breakdowns. Really appreciate you tuning in. See you in the next upload.